India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Thursday morning. Markets, of course, yesterday doing very well, taking out the earlier highs, making a new high. This morning, the mood is a bit more somber. And that is, I think, thanks or no thanks to Nvidia, which will be a big talking point. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, morning.
Hi, good morning, guys. I guess when I was looking at the Nvidia print, the question that comes to mind is how much is enough? And, you know, whether too much is enough or not. And I think that's what Wall Street was grappling with for the better part of last evening. The numbers came in after hours, but I think there was a bit of a sell-off that was underway anyway.
Absolutely.
And yesterday we went ahead and hit all that fresh all-time highs. A bit of an anticlimax by the time we did finish up because the markets, well, they were not really charging ahead. But the uptrend is intact. I think we have tech to focus on today and second half of trade, Reliance AGM.
Nigel, we could have avoided any kind of pressure today if you had worn that jacket.
But guess who's got the green going today?
Yeah.
So, you know, it's the left side lifting things up. So we'll see if Prashant is a lucky charm this time around.
We'll see. But, you know, at least I think... let's just sort of tell you what you need to know as we begin a new session. And Nvidia will be the talking point, is the talking point across most of Asia. So much here because we don't have sort of, you know, supply chains and companies supplying to Nvidia or sort of chip manufacturers or fab guys. I mean, it's more the story in other Asian markets. But in any case, it's a big stock. It's at the center of the global AI theme. And after hours, I mean, it reported after New York markets closed, and the stock was down 7% then. I mean, actually, going into earnings, Nvidia was down about 2.5% regular trading. So second quarter was a mild beat. It was not a big beat. It was a mild beat. But third quarter guidance was below you know, what I would call very elevated, very, very highly optimistic, rosy expectations. And it was not a big miss or anything of that sort. I think on the revenue front, about $1 billion miss. And in terms of margins, about 50-odd basis point miss. So there were two sets of points which they put out as far as third quarter guidance is concerned. So this could be, I mean, the disappointment of the Nvidia that you're seeing out there could just be a little bit of sort of, you know, profit booking and just that. I mean, nothing major in that sense. It's not a shakeout. So the founder of Nvidia gave an interview post, so the results, etc. He said, and I'm quoting, he said, well, we're going to sell billions and billions of dollars of the Blackwell chip, which is a new chip in the fourth quarter. So there's enough there. I think it's just like a one-day kind of reaction. U.S. equities, you know, the action in the U.S. markets preceded the Nvidia results. So you've got to sort of look at that in that context. S&P was down 0.6, NASDAQ was down about 1.14, but all of this is without the Nvidia numbers. Dollar index, and I was sort of pointing this out yesterday, that's sort of creeping back up. There's nothing real catalyst for the up move, about 0.4, 0.5% up. But maybe just sort of stretched positioning more than anything else. So there's a bit of a lift on the dollar. We're back at about 101. Oil prices, they've been bouncing around. I mean, up 2%, down 3%. So last night, we are down about 1% on oil. So which basically gets us back to our own structure and our own markets. Now, the Nifty, of course, has taken out the last high. We left off at 25.52. So there are two levels, right, on the upside. One is the Fibonacci retracement, which is 25,530 level we put out last, I think, 5 or 6 days. But before that, before this 530 level, 25,530 level, there's a daily upper Bollinger Band, which stands at 25,279. So those are the two numbers between here that the market perhaps can look forward to. Support comes in at the sort of hourly average in the 20-day. So 24,920 is the hourly, and the 24,571 number is the 20-day moving average. On the downside, structure for the Nifty Bank, the Nifty Bank ended slightly lower yesterday. It's not very clear, and I mean, you know, the price charts are also not very clean. Supports, I'll start with supports here. That comes in at the swing low of 50,856. Again, here we're not very far away from those supports, and the daily upper Bollinger Band is shifted to about 51,797. You need a clean, sustained kind of breakout here, which has been missing for quite a while. Now, GIFT Nifty, I think, is indicating a slightly subdued start, about 38, 40 odd points. I mean, the Nifty has been up for 10 days, 10 straight days. The market has been closing in the green. It's not as if it's 10 days and, it's not a big gain. It's been slow and steady. But we've been up for about 10 straight trading sessions. Today, you've got the Reliance AGM as well. The only thing which I think markets will watch out for from that AGM, of course, is, the listing for Jio. And I think will we hear something in terms of timelines, etc.? We'll see. So that's the clock counting down to the RIL AGM speech, which I think will be relevant for markets in the second half, of course. Surabhi.
Absolutely, and that's a big event to watch out for. But just for a minute to go back to the point that you made on Nvidia, I mean, I guess this is classic bull market stuff, right? Yeah. Lofty expectations, and there is delivery, but you still want more. So just for the record, I want to put the number. So we know what we're talking about, this massive, massive chip giant. Absolutely nothing wrong with the numbers. 122% up on the revenue. That's the quarterly revenue. Guidance of building on it in the next quarter. The guidance is $32.5 billion. The street whisper numbers apparently were $34-35 billion. The buyback program is gigantic, $50 billion in buyback. That's what Nvidia announced. So no misses there. Then people started, quibbing about the gross margin and whether that's kind of declining. But what's the gross margin we're talking about? 75%. That's the gross margin that Nvidia is making. So just wanted to put the numbers up for awareness that, this is the extent of this juggernaut. But anyway, the street wants more given the stock price appreciation. So Asian markets are still kind of reeling under that impact. There's still a fair amount of red across Asian screens. Some of the semiconductor stocks, Taiwan, for instance, is down, and some of the other stocks as well in the supply chain across the region, they have been under some pressure. NASDAQ futures, let's go back and check that, because last time I saw them still down about 1%, despite the 1% decline, preempting the Nvidia story. So still down about 1% on NASDAQ futures, and also about 0.5% on the S&P 500 futures. So let's see. The global situation is a little cautious. The good news is that oil is giving us comfort because it continues to climb down and yields are steady. Now, on the RIL AGM, like Prashant mentioned, I mean, the first watch point, of course, is going to be, is there going to be any indication of a demerger or a listing of the different businesses, whether it's Jio or the retail business? That's going to get the market extremely excited. The other big headline came in yesterday. The Competition Commission of India clearance for the Viacom-Disney merger finally came through. Great timing, just ahead of the AGM. So we will, of course, get more commentary on the contours of the media business that Reliance is building, the largest, obviously, business in the country, media and entertainment. Apart from that, perhaps any more announcements on any strategic alliances, or maybe even sort of, strategic M&A on the O2C business. That's what is going to be a watch point. And then let's not forget, obviously, the new energy vertical, where all the gigafactories are coming up in Jamnagar and, the electrolyzers, the entire hydrogen project. So the market will want perhaps some more timelines in terms of bringing them to fruition and sort of the go-to market time estimates for the new energy vertical. So that's what we'll watch out for. Aside of Reliance, one more interesting corporate development. Interglobe, watch out for this stock, because our colleagues are telling us that there could be a block trade today. Nimesh is keeping a tab on this. Sudarshan's keeping a tab on it as well. And perhaps Rakesh Gangwal could be selling a little more of his stake, not all of it. Another tranche could be coming through. So we'll watch out for this. Fund flows, just to put them on the table. FIIs were sellers as usual. I mean, 1,300 crores of sell coming in. Yesterday's domestic institutional buying was a little on the lower side, just about 439 crores. That was an interesting departure from the norm. We'll watch whether this is a trend or just a one-off. Finally, yesterday, just as we were closing out, SEBI came out with its warning, saying that beware of SME companies and SME IPOs, and very, very stringent language being used there. But it's a warning right now. It's not regulatory action, but the warning called it out, saying there is a modus operandi followed by some promoters. Announcements are followed up with corporate actions like bonus issues, splits, and preferential allotments. We urge investors to be careful and watchful. But are investors listening? We'll find out. Nigel, so how are you reading the overall setup?
Just one word on Nvidia. You put those numbers very nicely on the table. The stock has done nothing for the last 2.5 months. The stock is down 10%. From the recent peak, in fact. It hit a high of around $140. It's down to around $125. So if my gut is correct, tomorrow when we wake up and we come on the show, it won't be down 7%. Let's see how that goes. Well, let's focus on the top cues then we're looking at. Today will be the Nifty expiry that we're looking at. So that's point number one. The second factor will be Nvidia's numbers, NASDAQ, both of them a little bit subdued. So we'll have the tech index that could start off a little bit on the weakish side. The large tech yesterday did very, very well, and select mid-cap companies as well. So we'll have to see whether or not we see some bit of a pullback on the tech names. And point number 3 will be obviously the Reliance AGM. Second half of the trading session will belong to that big boy, Reliance Industries. Let's tell you about positioning then. In yesterday's trading session, the FIs, well, they added 35,000 long contracts and they covered some shorts as well, which takes the long positioning now to around 62%. I, for one, don't like too many longs in the system, particularly from the FIs, because when there are shorts, you can have some bit of a cushion. And post this move, we are seeing that the long positioning has gone to more than 1.3 lakh contracts hard. I like a market that has some shorts. Normally, in fact, when you see this moving up, the markets find it a little bit difficult to move up. And guess what? The client positioning from being net long by 50,000 contracts in the last few sessions, well, now, in fact, they're actually net short. The client positioning is actually a negative 47,000 contracts. And normally, the clients have been getting it right. So the clients note that this is a net short position of around 47,000 contracts. What about the options data? Well, you have the 25,100 call that was fairly active in yesterday's trading session. Premium at around 35 rupees. So that's writing that we're seeing out there. And we have some writing even at the 25,000 put. Both these two strikes expire today. So let's get the numbers going then. Once you punch in these numbers, well, you'll have the data points up for you on the screen. Support going by the options data is at around this 24,950. Yesterday's low was closer to these levels, so that's important. And yesterday's high was closer to these levels. And the options data as well is suggesting that. So those are the goalposts for today's trading session. But as I've been saying the last few days, for a bigger move on the Nifty, well, you'll have to have the Nifty bank break out of the range. On the downside, it's protecting the 20 DMA. But as we saw yesterday as well, it went up to around that 51,400 odd mark, but it couldn't get past that. So we'll have to break out of this range to give the Nifty further direction from here on. It's an exciting trading session. We'll keep an eye out on how the Nifty expiry goes, how the tech names react to the overnight cues, and will the Nifty bank be the swing factor for the day?
All right. Let's get to our global guest then. Harold van der Linde is head of Asia Equity Strategy at HSBC. He's joining us now. Harold, good morning. Great to have you with us here on the program. Thank you very much for your time. Does Nvidia do any damage beyond one day or what? And what does it mean? Because it's essentially a big driver for global markets, US and the AI theme in specific. Your thoughts?
Oh, that's right. So there's questions being posed to the AI rally that we've seen, right? And it's not necessarily just an Nvidia question. It's more or less, we got $1 trillion in capex in AI around the world. Are we going to make $1 trillion of profits as well? I don't know how you use AI. I use AI in two ways. I have a free app that I use, and at home I pay $30 for a sort of open AI thing that you can use at home to make stuff and actually hardly use it. So they're not really making money out of me. Some of the businesses maybe do that. But so along the way, we know that some of these chip makers, they're doing pretty well. But along the way, somebody's losing money here. And I think this is what causing that cautiousness on AI. We've seen a massive rally. Yeah, we know that there is growth, but how is this going to unfold? Also, competition can come in. And that, of course, takes the fizz out of some of these markets. Taiwan, for example, parts of Korea are pretty exposed to this, part of China actually as well. And I think that's what's unfolding, and has actually been unfolding for the last 6 weeks or so already in these AI-related stocks.
Harold, hi. Great to have you on the show. So, this morning, there's some caution across the entire Asian region. Most of the markets are in a bit of a profit-taking mode. So there's Nvidia on one side. We've discussed that. There's obviously the anticipation of this rate cut in September from the US Federal Reserve. And then there's China and the whole slowing piece over here. So when you put all these things together, what's the sense that you get? What lies ahead for risk assets as we get towards the end of the year? Can the equity rally continue? And which equity markets would you expect to continue to outperform?
Yeah, I think, we will get support from the lower interest rates, and that's good. Another thing that helps Asia in particular is that what we see is that China is actually ramping up its exports. It's got a lot of oversupply, and that oversupply is being exported. And that is beneficial if you are a consumer in Asia. You can buy an EV much cheaper now than you could, say, a year ago, because Chinese exports are penetrating your particular markets. And that will take some of the inflation pressures in these places off. And we already know that some of these central banks would really want to cut interest rates. They're waiting for the Fed to do so. So that could mean that we're going to see lower interest rates in Asia say, over the next 12 months or so. So that I think is a positive already. Also, we've seen the US market rally already quite a lot. We could see a bit of a weaker dollar, maybe not so much, but that sentiment could actually improve sentiment for emerging market assets over the next 12 months. So I'm actually feeling somewhat positive for EM in that regard, and for Asian equities in general in that regard.
All right. Hi, Harold. Good morning and good to see you. I was looking at your notes with regard to the flows picture, and there has been some outflows from markets like India, Korea, I think a couple of others as well you have mentioned. But if you're bullish on the emerging market basket from here on, what's the toss-up? Where does India play out there? We have the structural story, but Chinese valuations have been attractive, and we've spoken about this, but that market doesn't seem to be getting going. Your view?
No, that's absolutely right. So what you actually see is kind of a funny situation in Asian equities that we don't have too often. So let's take it in a larger picture, right? You have Japan, the yen is strengthening. That's not so good for equities. So people are readjusting positions there. Then we have Taiwan and Korea. There was an AI story, mostly in Taiwan, actually. And that's fizzling out as well, as we just mentioned. So, okay, you don't really want to be there either. China, I'm leaving for the moment until the end. Then we got the ASEAN markets, and things are improving for them, but they're not big enough. So then you got India. But everybody I talk to is saying, okay, India is a great story, but it's just way too expensive for me. And what you now see is foreign investors being crowded out of the Indian stock market because the local demand is so strong. And we see that these foreign investors have gone underweight on India. And that's not because they don't like Indian story. It's just that they feel uncomfortable with the valuations. And therefore, by default, we see that people hold probably bigger positions in China than what at least the conversation that I have with them suggests. They are not so positive on China, but they're almost neutral there as well. And that's, I think, more a reflection of being uncomfortable in some of the other Asian markets. So, yeah, the outlook for EM could be okay, but for Asia, it's actually going to be quite picky. And so it's going to go to idiosyncratic sort of stories in sectors. Where you got Malaysia, for example, the power consumption is really good because data centers are being built there. You got Indonesia, lower interest rates. In China, there's here and there some idiosyncratic stories as well. So that's what's happening. People are trying to dig deeper and shift through the rubble, if you want to put it like that, to find the interesting equity stories around the region.
I mean, as they say, sometimes too much choice is not good, right? The local investors have nothing to do but here in India, and it has worked out great. But that's only in jest, Harold. But take your points, excellent points as always. Thank you very much for joining us, and it's a pleasure having you here on CNBC-TV18. So foreign investors still finding India a little punchy and looking at some other sort of markets around as well. So that's essentially Harold and his thoughts there. What we'll do is we'll just lay out some more opinion for you. And let's start with what Mahesh Nandurkar of Jefferies has to say. He says that post a sharp rally in the calendar 2023, small and mid caps continue to outperform so far in 2024 as well. With mid caps yielding better returns versus the Nifty, this could be attributed to strong flows and higher earnings growth expectations. In the last 5 years, local shareholding has risen while promoter holding has declined. Mid-cap EPS is expected to post 18% plus CAGR over F5 24 to 27 versus 15% plus for the Nifty, with estimate of 110 basis points ROE rise over FY 24-26. Mahesh recommends staying selective, and Amber Enterprises, V-Guard Industries, Blue Star are some of his key picks.
A lot of stock-specific action track for you. Let's list out the list that we have for you. We are looking at Reliance Industries, TV18 Broadcast, HCL Tech, PB Fintech, Wellspun Living, Vedanta, Aptus Value Housing, and AU Small Finance Bank. They'll all be reacting to positive news flow, while SBI Card and Interglobe Aviation will be reacting to negative news flow. Well, we'll slip into a short break. We've listed out the stocks. Well, we'll get into further detail on all of these names. Don't go anywhere.
Welcome back. Here with us on Bazaar Morning Call, and it's now time to boil things down to stocks. I mean, the implied open is suggesting a bit of a negative start because of the headwinds that we've got pre and post Nvidia. Basically, in general, there's been a bit of a global equity sell-off. But what about individual stocks here back home? Our team is standing by with the CNBC-TV18 list of top stocks to watch. Guys, good morning. And Vamakshi, you have the big headline ahead of the AGM. The Reliance and Disney merger has finally got the approval of the Competition Commission of India. So tell us more.
Well, absolutely. It's a significant development for Reliance TV18 as well. And that is because the company has finally received the CCI nod for the $8.5 billion mega merger with Disney's Indian media assets. The approval paves way for the largest deal in India's media and entertainment industry. And this transaction is expected to be completed in the last quarter of this calendar year or the first quarter of the next calendar year. However, it is important to note that this nod is subject to compliance of voluntary modifications, and we will have to wait for clearer details to emerge on those. Let's also revisit the deal that they had announced back in Feb. RIL, Viacom 18 and Disney India will be forming a JV. Viacom 18 will be merged into Star India. Reliance Industries will be controlling the JV and they will be investing 11,500 crores in it. RIL will own 16.34%, Viacom 18 will own 46.82% and Disney will own 36.84%. Neeta Ambani will be the chairperson of this JV and Uday Shankar will be the vice chairperson. Now this JV will bring together iconic assets across media as well as sports. This entity would boast of 100 plus TV channels and 2 online streaming platforms, which includes Disney Plus, Hotstar and Jio Cinema. They will also own broadcasting rights for all major sporting events, including the IPL, ICC, BCCI cricket matches, the Indian Super League, that is for football, NBA Pro Kabaddi League, the Olympics, among several others. So overall, this bodes well for Reliance as well as TV18.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's hop across to Abhishek, who's here to tell us about SBI Cards. Abhishek?
While RBI has given out, the momentum with respect to credit card business momentum for the month of July, at an industry level, the card issuances are up 16.35% YOY for the month of July. And when compared to month-on-month, it's up 0.7%. Spends are up 19% YOY and 8.7% month-on-month. So spends have increased massively over here on a month-on-month basis. Average spends, if you calculate, per card, comes out to growth of 2.3% YOY and about 7.9% month-on-month. For SBI card, the total card issuances is up 10.2% YOY and about 0.5% month-on-month. The spends have increased by 3.6% YOY and about 6.5% month-on-month. So average ticket size is down 6% YOY, but it is up 5.8% on a month-on-month basis. If you take a look, they continue to lose their market share in terms of cards. The market share is now down to 18.49% when compared to 19.53% on a YOY basis and about 18.53% on a month-on-month basis. Even in the spends, they have lost market share. It's now down to 15.56% when compared to 17.88% on a YOY basis and about 15.9% on a month-on-month basis. So expect the stock to be weak in trade today. Back to you.
All right, Abhishek, thank you very much for that SBI card for you. HCL Tech is the next one that we're going to focus on. Reema's got details here. Reema, good morning.
Hi, good morning. So HCL Tech held its analyst day yesterday, where the company sounded confident about maintaining a double-digit revenue growth over the medium term. So perhaps for the next 5 years. They said that the addressable IT services market is expanding, and the company is well placed because of the investments that they're making in AI, SAP, cybersecurity. They also spoke a lot about AI. The industry is at an inflection point with rising adoption of AI. In terms of the near term, the demand setting is a little more optimistic. They are seeing green shoots of discretionary spending coming back in Bfsi. But on the whole, the company sounds positive about delivering industry-leading double-digit kind of organic revenue growth over the medium term. CLSA and Jefferies have a hold rating. Morgan Stanley is upbeat. Their target price stands at 1705 with an overweight rating. Back to you.
Okay, all right. Thanks so much for that, Reema. So we'll watch out for HCL Tech. On to Nimesh then, who's watching out a bunch of stocks, I think, because of expected block trades. Nimesh, I'm going to crown you block trade Badshah now, because you have all the buzz and all the cover. So tell us, which are the names today?
Well, Silvi, I'm focusing on PB Fintech and Welspun Living. Of course, the biggest deal will be IndiGo, which Sudarshan will highlight. But on PB Fintech, Tencent is selling 2% stake. They've offered the price of 1660, a 4.5% discount. And the Tencent is going to raise close to $190 million. Remember, there is a 60-day lockup for the seller after today's block. Well, I'll go with the green because it's a small block. Other one is Welspun Living. The promoter entity is looking to sell close to 4.5% stake. Even here, the discount is close to 5%, but I'm expecting the deal to happen in the block window. So if it happens in the block window, stock should react in the green. There, they are raising $106 million, and there is a 180-day lockup for the promoters after today's block. So two deals of $100 to $200 million each, PB Fintech and Welspun Living.
Okay, all right. Thanks a lot for that. Nimesh, always on the ball. Well, let's talk about Vedanta. That stock has been more or less flattish the last couple of days, and it's recovered considerably from the lows that it made. Well, they're going to be considering the third interim dividend on September 2nd. And just to give you a background, they've already declared 15 rupees of dividend in this year so far. Why are they going to be declaring this third dividend? Because in the last 2 weeks or so, they've raised some money. How is that? By the OFS of Hindustan Zinc. Via that, they've for their 1.5% stake, they raised close to 3,100 crores. Besides that, they're going to be getting dividend of close to around 5,100 crores from Hindustan Zinc. They paid out more than 8,000 crores because the stake Vedanta has in Hindustan Zinc. So they have a corpus of more than 8,000 crores to pay out. If they pay out the entire thing, that amounts to close to around 21 rupees on a per share basis. But Nuvama, well, they are moving with expectations of around 15 to 20 rupees on a per share basis. Other analysts are in that vicinity of around 10 to around 20 rupees. So expect the stock to open up in the green.
Okay, so the sweetness of a dividend expected to keep Vedanta in the green as well. Thanks for that, Nigel. Let's quickly move on back to Abhishek. Abhishek, you're watching for Aptus Value Housing and AU Small Finance Bank. What is the development here?
Well, Citi is holding a Bfsi conference wherein, managements are talking about their guidance and how they see the way ahead. So, Citi has written on Aptus Value Housing the neutral rating with a target price of 358 per share. The key takeaway from the, conference for Aptus is that they will expand not only in Maharashtra and Odisha, but also, footprint in Telangana and Andhra Pradesh in FY25. 20 branches in these two states will be opened. They are confident of sustaining 28 to 30% growth in AUM, and they are targeting to increase the proportion of digital sourcing to about 25% from current level of 18%. They will contain the credit cost at about 0.3 to 0.4% for the fiscal. However, net interest margin can come under pressure by 10 to 15 basis points owing to rise in cost of funds. Now, Citi is also written on AU Small Finance Bank with a neutral call and a target price of 684 per share. The bank has retained their credit cost guidance of 110 to 120 basis points for the fiscal, that is FY25. They are confident that they can double their loan book in next 3 years, and deposit will not act as a constraint for growth. However, they are being cautious with respect to raising high cost deposits. ROA guidance has been maintained at 1.6% to 1.8%, and they will apply for universal banking license in September 2024. Now, earlier in the con call that they had for Q1 FY25, they had guided that they will apply for universal banking license in August of 2024. So a month of postponement has been done by AU Small Finance Bank with respect to applying for a universal banking license to RBI. Back to you.
All right. Abhishek, thank you very much for that. So that is the word on some of these names. IndiGo is the one, the big one, where there is this block. I think the size has been upped. So looks like there is enough and more demand. So that's Sudarshan is here with details. Sudarshan.
Morning, Prashant. So big block is launched to raise up to rupees 10,300 crore, and like last time, this time too, Rakesh Gangwal decides to increase the size, and this time the size is increased to 10,300 crore from rupees 6,750 crore. And through this block deal, Rakesh Gangwal, who is also co-founder of IndiGo, may sell up to 5.8% stake, and for the same, indicative price is seen somewhere around 4,593 per share, which is a discount of almost 6% to yesterday's closing price. And post this tranche of stake sale, there will be a 150-day lock-in period for the next tranche of sale that will end in January 2025. And bankers for this deal were JP Morgan, Morgan Stanley and Goldman Sachs. And if I talk about some of the alerts, since September 2022, that was the first time that Rakesh Gangwal had sold IndiGo stake. So far, before this stake sale, today's stake sale, he has sold 17.23% stake sale, and post today's sale, total stake sale of Gangwal will be 23%, and that would be worth almost 27,000 crore, and post this sale, Gangwal will hold nearly 16% stake. Now, coming to the stock performance, since September 2022, first time when Gangwal sold the stake, stock has surged 150%. And since the last time, that was March 2024, last tranche of stake sale, stock is up 51%. Just lastly, one interesting point, last time when he had sold 5.8% stake, he had raised 6,750 crore. This time, he's selling the same amount of stake, but raising more than 10,000 crore.
Wow, Sudarshan, that's fantastic perspective as well. I mean, really put it in context for us. And I wonder how Mr. Gangwal feels about it, watching the stock price soar after he's been selling down his stake in the company. Thank you very much for that. Let's see how that block progresses. So let's quickly recap the list of stocks to watch today, the ones that have positive news flow around them. Reliance Industries, TV18 Broadcast, HCL Tech, PB Fintech, Wellspun Living, Vedanta, Aptus Value Housing and AU Small Finance Bank. Stocks with negative news flow around them are SBI Card and Interglobe Aviation because of the huge size of that block trade that's expected. Well, that's on the equity side, the stocks to watch. Let's now move on to commodities and take a look at what the headlines are there like. We have Manisha joining us on the phone. Manisha, good morning. So there's a bit of a respite for the dollar index. It's recovering from the lows. What does that mean? I mean, and what's the overnight action like for commodities?
Well, there is some profit taking definitely happening in many of these commodities. And as you said, the dollar index gaining to 101. This is ahead of the second quarter GDP data from US that comes in today. It also is about US jobless claims data that comes in today as well. And then inflation numbers come in tomorrow. So the next couple of sessions are going to be quite important in sense of data watching. And the US dollar index has gained ahead of that. Also, a 25 basis point rate hike from the US Fed is now factored in markets. If anything more is what would give you a reaction. And if the dollar continues to gain, that could put some pressure as well. Today isn't such a great day for commodities because when you look at the crude oil prices, it's a second straight day of decline into the markets here. The China demand concerns are still there, and the U.S. crude inventories have declined less than what the street was anticipating. It also is a day of profit taking for gold, silver. They both fell overnight. For the metals as well. Remember, the previous week and most part of this week has been bullish for metals, but today is a day where you are looking at copper, zinc, aluminum, most of them trading slightly into the negative. It's marginally down, really. But the month of August, of course, is quite on the bullish side, but the day today has seen some profit taking.
Right, Manisha, thank you very much for that. So that's commodities and metals specifically in focus. We'll take a quick break here. We are back with Gurmeet Chadha, Managing Partner and CIO at Complete Circle. He'll be with us for some fundamental stock talk. Stay with us.
Welcome back. Well, let's also focus on another story that's been developing on the sidelines, and it involves obviously a listed entity, so it becomes very important for us to track as well. Samir Modi has said that he is willing to consider all options, including selling the business to end the Godfrey Phillips family dispute. In an interview with CNBC-TV18, just days ahead of the company's AGM, Samir sided with his brother Lalit Modi and calls on shareholders to oust his mother, Beena Modi, from the company's board. At least 3 proxy advisory firms have issued recommendations to shareholders to vote against the reappointment of Beena Modi as the managing director of Godfrey Phillips. Take a look at this.
You said you agree with your brother Lalit Modi. One of the proposals that he had put forth as a result of the arbitration in Singapore, one of the issues that he had raised as a way of settling this inheritance dispute is to sell off the entire business altogether and then use the sale proceeds to distribute them among the family members. Are you in agreement with Lalit Modi on that issue as well?
I'm in agreement that the fight needs to end. One way or another, the fight is not good for anybody, not good for the shareholders, not good for the company, not good for the employees. And if my father was here today, I see no reason why. I don't think that he would disagree with me of not having my mother as the chairman.
But not agreeing on selling off the business, that is not something that you agree with.
No, I agree. Whatever it takes to end the fight, whether to sell the businesses, end of the day, value has to be created. End of the day, businesses cannot be suffered. End of the shareholders cannot be taken for a ride. And family fights should not have any place in the boardrooms. And if that is a solution to preserve value, so be it.
My one final question to you as far as this dispute is concerned, Mr. Modi. You talked about wanting to end this fight, wanting to settle this fight, you being in agreement regarding with your brother regarding settling of this dispute, even if it means selling the business altogether. Let's talk about you. Are you willing to sell out of Godfrey Phillips, your company, a legacy company that's been within the family?
Well, I'm going to do whatever it takes to create value. I mean, not to destroy shareholder value, not to destroy the company, whatever it takes. I'm not skewed one way or another. I am very clear that the company is above all. I'm very clear that my mother cannot be appointed again. I'm very clear that I'm supporting my brother. And I'm very clear that the NRC is defunct. How do they assault a director? How do they make up stories and come out with videos that are not true?
Interesting chat out there. Well, do whatever it takes to increase the value of shareholders, and that's the takeaway, and try to, come to some kind of, some kind of meeting point between the brothers. Let's see how that goes as well. But let's focus on a couple of other names. Gurmeet Chadha, managing partner and CIO at Complete Circle, joins us on the show. Hi, Gurmeet. Good morning. You want to comment on Godfrey Phillips? The stock has been a big outperformer. Any view out there?
So Nigel, I think a developing story. I think it's not easy to just wind up everything and settle disputes. But obviously, any decision in favor of that, if both warring factions agree to a amicable solution, I think it's good for shareholders. But as I said, it's a very evolving space. It's not a simple mom and pop store. You can just wake up and chat and then straight to proceed. It's a long journey, both in terms of arbitration as well as liquidation. And these are just early days, so I think we'll just keep my comments to myself right now and see how it evolves.
Gurmeet, I mean, just a follow-up on this, and these things are hard to kind of understand because there's too much going on. Let's pull up a 1 year of Godfrey Phillips. Actually, even if we look at backdated data, the stock used to be less than 2,000 rupees at the start of 2023, Godfrey. And this is just 12 months. If you pull it back even further, you'll see that from a level of about 2,000 to now nearing 5,800. That's a phenomenal move in the last couple of days. So Gurmeet, just trying to understand, I mean, basic factors at play here. Could this be the anticipation that as this settles and one or two or some of the family members exit, there'll be a new guy coming in and there'll be maybe an open offer? I don't know if that's the theory at play. Tell us what you make of it. And also, I mean, that theory aside, we have to look at business fundamentals from, investor perspective. Anybody who's looking at the rise of Godfrey Phillips, what is the advice you'd give to them?
So you said it should be, it's anticipation of maybe a better management. It's anticipation in terms of, an amicable solutions coming in. And obviously we are in a bull market. We should never discount that. So, obviously news gets discounted and reflected far more quickly in times like these than earlier. My sense would be not to just play just basis that things will change. I think the underlying business needs to change far more. And I think in that front, the jump in price doesn't justify such a turnaround as far as the business prospects goes.
Gurmeet, morning, Prashant here. We're going to come back to you in just a bit and ask you for your views as well about the mega media merger, right, which the CCI is now approved. But we've got Karan Thorani joining in now as well. Karan, good morning. Great to have you with us here early on. You've written about this. We've spoken about this earlier. Now the Competition Commission sort of okaying the deal. What does it mean, prima facie, from a market perspective?
Hi, Prashant. Good morning. So I think this indeed is good news because CCI approvals generally take time. And this is coming because both these entities are very large in terms of size. They've got about 40% market share in the TV advertising segment. So I think, we'll have to wait in terms of, what channels have been shut down voluntarily. I think there are some reports, mentioning that, if at all. But largely, I think net, there was the issue with sports, wherein they command about more than 80% market share in sports. So, hopefully that's not happened and some film-style channels have been let go off. So I think it's a good thing for both these entities, RL, Disney. I think competitive intensity will clearly go up. They'll have a commanding position both on the linear TV side and the digital side. They'll have about 33-34% market share on the digital side as well. And digital is the future for M&E, and clearly they have got the support of last mile, via Jio Fiber and Jio Mobile, which will lead to better scale on the business.
From a listed entity perspective, Karan, any implications straight away?
So from a listed entity standpoint, I think TV18 owns only about 6% in the merged co. So basis that you get a valuation of about 4,300 crores for this kind of 70,000 crores what they've paid in terms of total valuation. And if you look at TV18's market cap today, it's about 8,000 odd crores, which means that the balance business, which is the news business, is valued at about 4,000 crores as on today. Now, let's assume that there are synergies in the business and, efficiency-wise, profit-wise, growth-wise, things are better. And this valuation of 4,000 crores, which is today, moves up to maybe 6,000 crores on a forward basis. Even then, the news business is trading at fair valuation of 2,000 crores. So I think from an upside standpoint, fundamentally, we don't see any big upside rather from TV18 from here on. Unless, we see losses converging sharply, because you have to articulate the fact here that, Jio Cinema is making losses, Hotstar is making losses. Both these platforms are making hefty losses, and they are going to come under this large mega entity, and that's primarily because of sports content. So if probably they scale up to subscription revenue, they start charging the customer for the content if something really changes. Otherwise, we don't see any kind of a big upside.
Karan, hi, morning. That brings me to also implications for the entire ecosystem. And I know that your target price on Z has been, I think, northwards of 200 for a while. We discussed this even when this settlement came in with Sony just a day back, right? Now, given the size and scale of this entity and the commanding power it has, when practically you want to watch any sport content, you'll have to be on these platforms, right? And the whole slate of entertainment, movies, etc. You've got, 2 TV studios merging. So given the size and scale, what would be the implications for Z, or any of the other incumbents, but Z because it's the immediate listed entity?
See, in terms of impact, definitely it's a negative impact for the overall M&E ecosystem, whether you call it the global OTT giants, whether you call it Z or any other players which are there, right? So each one has got their own pros and cons. So in this case, you have got scale, you've got digital focus, you've got, monopolistic approach in the sports business. You can grow faster ahead of market. You can scale your digital business much better, but there's an issue in terms of profitability. So, Indian market is not kind of paying hefty money in terms of subscription revenue. So how will you actually, narrow down your losses? I think that's a concern. And somewhere I think valuations, will kind of always appear, high because of this issue. On the other hand, you've got players like Z and maybe even Sun TV, who may not be able to scale up in a very big manner, who may not go, above industry averages, who may not gain market share. But I think these companies have got to the advantages that they're not present in the sports business. So they do make very healthy EBITDA margins. In the case of G specifically, if you look at the EBITDA margins, it has seen a sharp increase from 8-9% band towards a 12% kind of a band. And I think the management has guided for 18-20% margin improvement. So I think from a risk-reward standpoint, if margin execution continues, if things remain to be on track as per management guidance, valuations are very, very compelling today for Z. So I think neutral like
Sun, you have Karan, you have a buy on Sun as well?
So we downgraded Sun to a reduce to a target price of 860. We had a buy at about 595. The stock rallied by about 35-40%. So currently, I think valuations are already moved up. For Sun TV, core broadcasting was at about 7 times P. Today, that's trading at about 13-14 times P.
All right, that's a crisp view early on in the morning. Karan, thank you for joining us. Very helpful to put all of that in perspective. Thank you very much and have a good day. Gurmeet is still with us. Gurmeet, thanks for waiting. You want to just sort of outline your views on some of the action in the unlisted market? There is this IPO closing today, Premier Energies. I don't know if you have a view. Sold stock at 450. Expected listing, the premium is indicating a listing at about 900. There is, of course, the SME bit which is going on. Any thoughts, anything interesting out there?
No, it looks an interesting play, Prashant. I heard the management speak in various interactions, including your channel. And obviously, it's a premium play. Unfortunately, we can't apply in a PMS format because the settlement of shares have to happen on the same day. So that doesn't work in a PMS format. It works for an MF and other pooled format particularly. But so we'll be looking at it post-listing, if provided the gains are more subtle and not the way we are seeing today, in the IPO market.
Gurmeet, just going back to the conversation that we were having, Reliance, the media business is one focus. You've probably heard Karun speak about it. There's the AGM as well. What would be your sort of biggest triggers? And if you buy Reliance today at 3,000, what would the expectation be, say, a year down the line? And what are the key triggers that you look at?
I think the biggest trigger the market would look at is a clear timeline of demerger and value unlocking. I think Jio IPO, I think there were rumors in the market that this will be announced during by Ambani's birthday. That did not happen. So I think AGM, obviously, the market would be keenly expecting. And as I said, a clear timeline. Any monetization in the energy business, which so the Aramco deal did not really, take off. They have been spending a lot, so more updates would be welcome. The street would want to see whether there is monetization happening or it's going the Jio way, where you're doing capex and it will lead to more debt and lesser free cash flows. I think there's one concern, a little bit of a concern there. And I think this merger to me is extremely positive. I think they will create a huge digital giant. I've been saying this. This is India's Netflix moment. We have a very strong entity with a great 100+ channels, 40% plus advertisement market share, and ability now to really optimize the inventory, especially the advertisement inventory, because the competitive bids will reduce. They practically own most sporting assets, which is IPL, ICC, EPL, Olympics, almost great lineup as far as the sporting inventory goes. And a lot of synergy also in content creation. So I think I'm keenly looking at it. Mind you, Netflix is $300 billion market cap. We still don't have an Indian company at $300 billion. I think digital entertainment is something which probably will evolve. We'll probably see this space evolving a lot more as we go down.
All right. Gurmeet, stay with us. We're going to take a quick commercial break here. We'll come back in just a bit. We'll have Mitesh and Sudarshan with us as well with some technical trading ideas, and we'll continue to discuss individual names with Gurmeet as well. Stay with us. Okay, welcome back. We've got the pre-open session kicking off in the next 9 minutes or so. Mitesh is with us and Sudarshan will be with us in just a bit as well. Mitesh, good morning. Thanks very much. As always, how are we set up? 10 days, market's been not running higher, but drifting higher, but higher nevertheless. Slightly lower start, 20-30 points. What would you do?
Morning, Prashant. So I think on the Nifty, we made a new high, but what is worrying is the bank Nifty, and that is not participated. So I think that is why, you are not seeing strong momentum on the upside, or the drift is clearly for the Nifty is on the upside. So I think, decline should be used to buy into it, but I would want a slightly bigger decline in case you can get it. Anything closer to about 24,980, 970 would be a good entry point on the Nifty spot. And once that happens, I think, then you might want to take a long position with a 50-point kind of a stop loss and see how it goes from there. Eventually, Nifty will make fresh highs. The only thing is that how the bank Nifty reacts today is something, which I've been watching very closely, but we haven't been able to get a strong movement on the bank Nifty. So I think that's why, the move is very slow and labored.
Okay. Hi, Mitesh. Good morning. Let's also talk about stocks and individually, what are you working with? And also throw in a word on, of course, Reliance Industries with the AGM in focus today.
So on the stock side, Surabhi, good morning. I have more of buy calls, and I'll come to Reliance later. I have, in fact, mix of buy and sell calls. Hindalco is a buy with a stop at 692 for targets of 730. PI Industries is a buy with a stop at 4460 for targets of 4630. A sell on Apollo Tyres with a stop at 505. Here I would look for targets of 480. And BHEL also seems to be, turning on the negative side. So sell here with a stop at 302 for a target of 277 to about 276. Reliance, I think the pattern is quite positive, but last 3-4 days, 30, 40, 30, 50 has become a supply pivot. So in case we see the stock get past that, I think good chance that we might see 31, 40, 50 being tested. It's still a trading move. I don't have signals of a big medium-term uptrend starting over here, but at least on the short-term charts, the bias is positive.
Okay, got that, Mitesh. Thanks very much. By the way, those are some of the large blocks that Nimesh was alerting us on that they were likely to take place, and they are taking place now as we speak. PB Fintech and also Wellspun. So PB Fintech about 1.75% equity. Wellspun Living, I remember Nimesh saying that, we don't know, we'll have to wait and see when the data finally comes in the evening, but this could be some bit of promoter paring down their stake as well in Wellspun. So let's see how that plays out. We have Sudarshan Sukhani now joining in, so let's get his trading strategies in as well. Sudarshan, good morning. So what's the approach at the index level?
Good morning. See, we've had two very dull days for the index, for the Nifty. And dull days can sometimes be a replacement for a minor correction. Since we are in a strong uptrend, I'm assuming that these 2 days when we did not trade were really a substitute for some kind of a decline. And that's good news. It means we are still in a very strong bull market. So today I would be a buyer. Ideally, we will get a dip, and that dip should be used to buy. Just to, as a matter of care and precaution, keep a 150-point stop loss for a positional trade and go long today. Even if it doesn't work out, I would suggest staying long with it.
Okay, and Sudarshan, what about individual stocks? What are you working with today?
Sure. Coforge is a buy with a stop under 6,080. Godrej Consumers is a buying opportunity with a stop under 1450. IndusInd Bank is coming out of a very large trading range at the lower end of after a decline. That should be a positional buy, and it's also interesting because it's a buy on dips opportunity. Consider buying IndusInd with a stop under 1380. And finally, Laurus Labs, part of that roaring pharma pack, is a buy with a stop under 450. It's on all buy list.
Okay. Mitesh, if I can just ask you to opine on Orient Cements. I mean, there is a marked cut which has come through over the last 3 days. Basically, it's gone from 330 to 280 in 3 days flat. So, I mean, this was one of those potential deal stocks. So, the price telling you something, that's another story. But technically, where does this one go? Orient Cements.
So, Prashant, one thing is that the uptrend has come to a halt, I think clearly reversing. But also is the fact that before this up move happened, in January, the stock made a weekly closing high of around 283, and it's trading right there. If this level holds, then you might see a bounce back, though I think eventually from high levels, we'll again see supply come in. But in case we break below this, the eventual targets are in range of 264 to about 260.
Okay, all right. Got that. Sudarshan and Mitesh, thank you very much, both of you, for joining us, and we'll sort of come back to you a little later for more. We'll take a break, and we'll come back with an exclusive conversation with SBI's new chairperson, Mr. C.S. Sethi, will be in conversation with my colleague Lata. So that'll follow in a bit from now.
Welcome back. Well, time to get in Soni Patnaik to give us a sense of some F&O trades that one can consider today. Soni, good to have you on. Good morning. So what are the trades, the stocks, or the indices you're looking at?
Good morning, Sirbi, Prashant, Nigel. Thank you for having me on the show. I think Nifty is showing very strong long bets as per the rollovers data that we can see. It is clearly indicating at a 62%. So there's a possibility that any dip we may see today, it can be a good opportunity to get into longs. Nifty in September series can target 25,400 plus levels before showing any signs of profit booking. It's the only Bank Nifty that's a bit of a concern right now, because Bank Nifty has actually shown short rollovers from August to September series. And as long as we can see the option chain, 52,000 call writers are quite aggressive. So Bank Nifty may be a bit of a dragger. Both of the indices, I think Nifty is fine from current long levels. Also, one can look forward. I think it's fine to stick with stock specific strategy for the day. So one we can see in granules, which has seen a very good breakout. It's a good option chain breakout plus a decent 64% long rollovers to September series. I think granules one can buy in the range of 705 to 700, keeping a stop loss of 685 and a target of 730 to 740 can be seen. The second pick is from the chemical space, PI Industries, which is approaching a very fresh breakout on charts. It has seen very aggressive 84% long rollovers to September series until now. And PI Industries can be bought at current levels, maybe in the range of 44.90 to 4500. Keep a stop loss of 44.20 and a target of 4600, 46.40 can be seen.
Okay, all right. Thanks a lot for that, Sony. Well, let's get back to Gurmeet Chadda then. Gurmeet, I wanted your view on AU Small Finance. We have news flow that's coming in today. They'll be applying for the Universal Banking License in September 2024. How are you all placed on this name in particular? And among banks, what do you like?
So positive for them, Nigel, because this is a direct bearing on the cost of funds. For them, and AU, except for a little period in between, has demonstrated good return ratios as well as asset quality metrics. What we like currently is Federal Bank, still trades at 1.3, 1.2, 1.3 book. If you see last quarter Q1, that was the only bank which grew deposits at almost 19-20%, almost 5% quarter on quarter, along with credit growth being very healthy at about 18-20%. Good part is the wholesale retail mix has changed considerably. Now the deposit rate is almost 80% retail now, which is very heartening. And to me, the biggest trigger is Mr. Manian coming as the new MD. I think people don't know Mr. Manian was instrumental in building Kotak as a very solid franchise, and it's a great leadership transfer from Mr. Srinivasan to him. So I think I'm a believer once the leader comes, a big re-rating happens. We've seen that with so many banks, including ICICI and Axis. So this is one which is right on top of our radar.
Right. Gurmeet, do you have a view on Paytm? The FinMin approval has come in for investment in Paytm payment services. I mean, many large investors have sort of bought in, but they bought in earlier at about 350, 400 levels. Stocks moved up. What's your sense?
Prashant, my worry is I think the big heavy lifting they were doing was on the short-term lending, right? And the slew of regulatory issues happening. I would want some stronger partner to come in. If that partner comes in at some point of time for a broader, let's say, re-rating of the business. Till then, there are other better, good new age businesses plays which are evolving. I think Zomato is doing brilliant with quick commerce and now ticketing business. I think even PB FinTech, there is obviously some block happening today. But look at it, 93% market share in insurance now. Just tells you how strong it has become in insurance aggregation. There are almost 40 insurance partners now. Even HDFC, Ergo and ICICI Lombard has come in. They were earlier avoiding it. It tells you the indispensability of the channel. And even the credit business now, Bazaar is turning a bit of positive. Almost now 16% market share in customers who have a credit score. Obviously, the market is much bigger than that. So if they can really streamline that a little bit more on the credit side, I think they do well. Plus, they have a good 4,000-5,000 crore cash, which they can pivot and use for different purposes. Valuations obviously are a little bit of a stretch, but the model is now set. You have a very good take rate on insurance and health, slightly lower take rate on motor insurance. And this is a good renewal business. So once you really establish it, the renewal takes care of everything. And now they're getting into, the insurance, reinsurance broking as well. So I think I like that more as a continuity currently. Paytm maybe once you have maybe some stronger hands coming in.
Okay, all right, Gurmeet, we'll leave it there. Good perspective and great chat as always. Thank you very much. Have a wonderful day ahead. Thank you for joining us. State Bank of India bids farewell to its chairman, Dinesh Kumar Khara, making way for his successor, Mr. C.S. Sethi. He, of course, assumed charge yesterday. Mr. Sethi previously served as the managing director of India's largest public sector lender and oversaw risk compliance in retail businesses. The 59-year-old started his career as a probationary officer at SBI in 1988. My colleague Lata caught up with the man himself and began by asking him about his first thoughts and plans as he begins this new experience. Listen.
It's definitely a big job. I think it's more of a humbling experience that, somebody's trusting you to carry such a large institution. It is not only one institution, it's a conglomerate, as you know, that they're everywhere. Yes. I'm very thankful to all the stakeholders, particularly the Government of India, to repose faith in me. And I see that it's more of a greater responsibility. responsibility both to the institution as well as to the country. We are the proxy to the economy.
Absolutely.
And obviously, I think it's a great humbling experience.
Yes, sir. I think nearly a 40 lakh crore deposit base would make you as large as the Indian budget. So it's no laughing matter. But let me start over there. Deposits is the place where banks are now, kind of racing against one another. Do you think this is going to push up costs even more? Are we at the peak of the deposit rate, or is the war still on?
I think the war is a very strong word to be used, I suppose.
The competition for deposits.
The competition is definitely there. The pent-up demand for credit. Obviously, we have had an excellent run on the deposits, not in the other sense.
I got it.
We had good growth of deposits during the COVID period, right? I think most of the times we compare that growth with the current growth rate, number one. Number two, on the contrary, credit growth was lower in those periods, and now, of course, the credit growth is picked up. So the disparity is there, and this is not the first time that we are having this disparity. Earlier also it was there. What I visualize, or I'm able to see that everybody is thinking that there would be some, monetary movement of interest rates.
Yes.
If you see, much of the concentration of the deposit is happening in the 1 to 3 years buckets, which means the banks are also looking at just tweaking the rates within these buckets.
Yes.
In order to prevent, long-term locking up of the interest rates.
That's right.
So I don't see that the huge rate war is going to happen. The competition will be in a different manner in terms of surveys, in terms of the leveraging the branch network and reaching out to the customers. And also maybe, within this 1 to 3 year bucket, what is that you're going to do?
No, all this is even before the new LCR rules have come. Once the liquidity cover for what they call unstable deposits increases to 15%, then do you think deposit FD rates will go even higher?
No, I think LCR is too early to talk about. Okay. I think we have been taking this stand that is only a discussion paper. Okay. Let us see. I think this discussion paper has several elements. It's in terms of the HQLA modifications. It's in terms of the runoff factors on various deposit categories. So we are engaged with the regulator.
But it is a draft regulation.
It's open for discussion.
Yes.
And I'm sure the regulator would definitely take opinion from all the stakeholders.
Okay.
I think let us not front run on that. I think we still have some time on that.
All right, let me come to the loan side and then ask you about margins. On the asset side, the problem is with unsecured loans. The Reserve Bank has already raised risk weights to cool it down. And we can see it, even your credit cost went up by about 10 basis points, if I'm not mistaken. I think even more, it went up by about 15 basis points. Do you think that there is more to come in terms of credit cost because personal loans, unsecured loans can get, can go delinquent?
No, I think the concerns of the regulator on unsecured lending is highly justified. As we keep saying that, there are unsecured loans and there are unsecured loans of SBI. And the uptick in the slippages, what we have witnessed in the last quarter, is seasonal in nature.
Okay.
And one thing is, because the asset quality of retail unsecured personal loan in SBI is gold standard, people do not want to tolerate even 5 basis point, 10 basis point slippages increase. I think
express loan category showed an
obviously, that is the only unsecured portfolio we have. All of the rest of the portfolio, except barring a few pension loans, much of that personal segment is, home loan is a very large portfolio what we have. So I'm not really concerned about this.
You don't think, credit cost can go, like above 50 basis or something?
No, it may go up a little, but I don't think it's a matter of concern, either on the asset quality or on the slippages or on the credit costs.
Okay. No, but personal loans are also the ones that you get more money. It's a high yield.
No, obviously. I think we will continue to focus on that. And our unsecured personal loan is essentially to the salaried class. Even if there are slippages, there could be temporary slippages. Some salary get delayed or something. But otherwise, I think there's no great concern.
I'll tell you the concern of the investor. Your cost of money could go up because, as you say, in the 1 to 3 year bucket, the deposit competition is very hot and doesn't show signs of flagging just yet.
No, but
and the cost of personal loans, you cannot lend too much because it is already showing signs of overheating. So will your margins be under threat? Your 3.2 is deliverable, you think?
3.35 is something
the last number.
Broadly it will remain there.
Okay.
See, if you see our credit growth has been secular across the segments.
Yes.
It's not that it's come from retail personal loan at all.
No.
It has come from agriculture, it comes from MSME, it has come from corporate. I think if we are, our product portfolio is so diversified, even if one product is not doing all that well, or we want to go slow for any reason, I think we are able to make up. Okay. And we have had double-digit growth across the segments. And I'm sure, I think that will continue. Okay.
All right, so the rise in credit cost is not a concern and credit growth will continue. That is the word coming in from the new man at the helm of State Bank of India, new chairman. Okay, we'll quickly go back and take the 9-10 calls with our technical experts. Sudarshan, so what is it going to be?
Consider buying Laurus Labs with a stop under 450.
Okay, and Mitesh, what about you?
Yeah, I'll go with a buy on PI Industries for targets of 46.20.
Okay, all right, gentlemen, thanks very much for all the calls. We're at about 9:12, and in the pre-open, let's just get the Nifty up on the screen. It's not too bad considering the sell-off across Asia. The pre-open Nifty is down just 17 points, so relatively better off. That's what we have at the moment. Let's quickly move across and go to Abhishek. There's an interesting note from UBS, I think it is, on the power financiers, PFC and REC, and it's sounding quite optimistic. Abhishek, tell us, what is the brokerage saying?
While UBS has initiated coverage on power financiers, so they have initiated coverage on PFC. They have a buy recommendation, target price of 670 per share. They have initiated a coverage on REC with a buy recommendation and target price of 720 per share, which means that there is upside potential of 25% for PFC and about 17% for REC. They say that they view both these companies as financiers of high growth renewable power generation and infra capex. So they believe that the renewable and infrastructure, which forms about 20% of the AUM of these companies, can go to about 40% by FY29. So growth would be supplemented by government's distribution scheme. Resolution of legacy assets will be a key monitorable event for them, which could provide tailwind in the near term. Access to long-term funds at reasonable rates is a key advantage as well. Both stocks remain an EPS upgrade cycle, so they believe that ROE will remain robust for both these lenders at about 18% to 20%. Back to you.
Thanks a lot for that, Abhishek. Explains why both those two stocks are up more than 1.5% in pre-open. But the other one that's moving is Vodafone Idea. We had news piece coming in late last evening, the final few minutes of trade. Rima joins us to break that down for us. Rima?
Thanks so much for that. So just, as you pointed out, the Supreme Court has agreed to hear Vodafone Idea's AGR curative petition tomorrow. That's the 30th of August. Now, Citi says this is a material development because it's been long pending, and there was also no clarity or certainty whether the Supreme Court will even agree to hear Vodafone Idea's curative petition. Now, if there is a favorable outcome, then it's a material positive because it can reduce Vodafone Idea's AGR debt burden, which stands at close to 70,000 crore rupees. Citi says the potential benefit can be 4 to 5 rupees per share or even higher. Their base case is that the target price is 22 rupees, but it does not factor any reduction in the AGR due. So again, a favorable outcome can boost the share price. Vodafone Idea's high risk, high return. This development, a favorable development, can also benefit Indus Towers and Bharti Airtel. Back to you.
All right, Rima, thank you very much. We're back in the courts as far as that curative petition is concerned, but it's a significant one, as Rima pointed out, in terms of share price for 5 rupees. I mean, worth if that does come through and there is relief which is provided via the petition. We've got the Nifty starting in the red as expected, but barely so. I mean, 25,023 is where we're at. The sensex is about 81,700. Bank Nifty, the real drag is down about 0.2. So more prominently, 51,050 is where the Nifty Bank is at. Mid-caps have got a tinge of red, green, beg your pardon. And I think the small cap index starts higher as well. IT index is down about 0.5%, so some sectoral sort of indices up on your screens, but it's more down than up. That's a Nifty heat map, and I think you've got easy 30 stocks lower, and the rest which are higher. Some opening up as of now as well. So nothing material at all. It's a very flattish and quiet start right now, 25,020.
Okay, let's watch out for all the block deal action movers first and see what's happening on Interglobe. It's down about 2%. PB Fintech is up about 2.5%, and Wellspun is a little flat on my screen. So let's see how that plays out. Those are the big newsmakers. Speaking of newsmakers, just want to pull up TV18 with, of course, the caveat that that is the company that runs and operates the channel that you're watching. The early tick that I saw was fairly upbeat. Yeah, it's still about 4% up on TV18 broadcast. So those are the newsmakers, but back to the main screen now. So where's the pressure? Hindalco, Ultratech Cement, Mahindra and Mahindra, Axis Bank, Dr. Reddy's. Now, these are the top 5 losers in the Nifty. Very, very diverse, as you can see. Not much of a sectoral trend. But you can safely say that there's some profit taking on IT. HCL Tech, Infosys, these are stocks on the lower side. Some of the banks like Axis and IndusInd have also started off on the weaker note. But then IT is split down right the middle. I just took the names of the losers. Look at the winners here, because bringing up the upside for the Nifty is Wipro. Even Tech Mahindra up about 0.5%, and even TCS is managing a little bit of a flash of green for the time being. So IT trends are very mixed. Reliance is helping the bulls' cause by at least staying on the green side of the flat line. Not much of an up move, but a little bit of green for what it's worth. ITC is up. It's absolutely flat, Nigel. So let's just take it down to the individual newsmakers. I think that's where the excitement is, because Nifty is not doing anything right now.
Well, that's right, Shurbi. NBCC is seeing some follow-through buying. Yesterday it was a big winner. Today as well, it's up close on 4%. One of the top volume stocks today. Both REC and PFC, they're reacting to that brokerage call. So both of them doing pretty well in today's trading session. Sonata Software, well, they won a multi-million dollar deal from a US healthcare company. The street likes it. Well, the stock is flying away, up close to around 6%. IndiGo Aviation, yes, it's a little lower, but just keep in mind that, in fact, the stock has come off the low of the day. The demand is fairly good. Now it's considerably off the low point of the day, and because the promoter entity is selling out, the global indices will have to rebalance themselves. The free float increases, and that's why they will have to. So that's why the stock has recovered quite a bit from the day's low. Top volume movers in trade, Paytm, you all mentioned. Jyoti Structures won an order late in the trading session, so that as well is higher. And TV18 and Network 18, both of them buzzing along as we speak. So a flattish to a mildly negative start, par for the course, guys.
Absolutely, and it's neither here nor there at this point in time. And I'll just make a few other mentions. So I think Idea is up 2%. Idea has got is the second largest volume-led gainer. We were just discussing this with Rima earlier. And Paytm, of course, about 3% in the green. We sort of spoke about this with Gurmeet. KEC is coming up with a 4% pop, so 900 plus on KEC. I can spot J&K Bank, which is up 3% right now. Tata Investment Corp has been, so I think day before yesterday, Tuesday or Monday was a big 20% day for Tata Investment Corp. It's starting about 2% higher. Keep an eye out on this one. Network 18 is up a full 6.5% now. Of course, part of the group which owns the news channel that you're watching. So 101, 102 on Network 18 on your screens. Look at the volumes there as well. Genus Power is up 5%. There is Aarti Pharma, which is up 6%. And I could go down the list, but volumes then start to thin out a little bit. On the downside, maybe, just take a look at a few names here. CDSL is got a cut of 3%. Stocks at about 1450. Very large volumes for this point in the day. I think Zentech is another one which is down about 5%. Suzlon is down about 1.33% at this stage. Bombay Dyeing is down 4%. Bombay Dyeing at about 215. Inox Wind is one of those huge performers. Stocks down about 2.25. Edelweiss is another one of those big performers. I think from about 70 rupees to 115 in 3 weeks flat. Stocks taking it a little easy today this morning. NIIT Limited is another one, which is, these are all just pullbacks after what have been very, very sharp runs in a very short time span. So, the market texture is just that. A little bit of halt, a little bit of pullback, and then we kind of start to just move up again For the Nifty, we're down about 20 points right now. Yogesh Patil is Chief Investment Officer at LIC Mutual Fund. He's with us to take some questions on what he's making of the market. Yogesh, good to have you with us here. Good to have you back indeed. Prashant this side. What's your sense, Yogesh? Are you comfortable at market levels? What have you been doing? Because flows are coming in into mutual funds. It's getting deployed. Promoter sale, early investor sales, that is also keeping a pace. There is large IPOs which are lined up. Just assess the state of the market. I'm talking about the next, say, 1 quarter or so. How are things looking?
Yeah, good morning, Prashant, and thank you very much for hosting me on your channel. See, this can be debatable. If you see last 3 years, we keep debating in the market. But valuations are gone up, but at the same time, fundamentals also improving. So we need to factor both things. I completely, not saying is a completely overvalued or a very fair value, undervalued. We need to check the sector outlook, and basically it's a stock specific and sector specific market always. And in terms of inflows, definitely India is getting, there is a change in the retail investor mindset in last 3-4 years, where inflows are much better compared to historical averages, because the real interest rates benefit is not visible for retail investor, and that's how they choosing mutual fund. And it's a good start for a country like India. Every time we depend on the FI's flow or maybe some institution, but this time is completely diversified and FIs are absent. But in terms of earning growth, we see a moderation in earning growth for this year, and maybe for next year, a mid-teens kind of growth. But overall, we don't think market is an overbought position, and is a more or less fair valuation, we do say, because India, the fundamentals of India has completely changed, because government changed a lot of strategies, reforms, focusing domestic manufacturing. It improves the outlook of India, maintaining good relations with all countries, and improving, focusing on manufacturing, controlled fiscal deficit, inflation, make the country and macro improving. At same time, currency stabilizes and is a more of a financialization of rupee. So more and more FDI, more and more FI and trade partners will come in next 5-6 years. So this is a long-term trend, and India's story is completely capex-driven story. So it is not like a 1 or 2 year. So it is for next 5-6 years, we do see a good investment in industrial side, especially on power side, railways, defense. So it's a much broader and longer theme. Like even power alone requires almost 30 lakh crore in power generation, basically. As of now, we have renewable power of 1,43,000 and 3 lakh yet to added in 5-6 years. And that to be true transmission, and we need a more transmission capacity in for solar and wind. So kind of capex we see is huge, and this is first time is happening in India. And and Chinese players and Korean players are not present in India as well as in US and Europe. So complete opportunity for India and export opportunities also for India is very, very high comparatively.
Okay, all right. Hi, Yogesh. Good morning and good to see you in. There's Nigel on this side. Talking about the power themes, either you could play those transmission, the other company is renewable plays, but the other way to play it was the power financiers. And you have got a couple of them in your list, PFC as well as REC. We have a brokerage note this morning, UBS, they're talking about how their book will change from year on. The asset quality is far better, and they also have access to relatively cheaper funds. What's your view on the power finances from here on? Some of them are up, 4-5 times in the last 24 months, but some still look good from here. Tell us more.
Yeah, so for next 6 to 7 years, the overall power sector investment, including generation and transmission, could be around 50 lakh crore. So initially, the opportunity is only with financer and then asset creator, which is basically capital good companies and engineering, and that could be, and then after 4-5 years, earning growth could be translated to asset owners and users. So if anyone want to play the power sector, initially you go by stage. You start with financing companies, then asset creators, which is basically engineering companies and capital good companies. So if anyone want to take the opportunity, so we need to take the full basket. May not be exactly 1-2 segment. So that's one of the reasons we diversified our power sector bet in across the board, including generation, transmission, and financials.
Okay, Yogesh, hi, good morning. So just if you talk about the overall, big overweights across the schemes, across your portfolios, in terms of sectors, what would those be?
See, industrials, followed by BFSI, consumer. These are the broader sectors. And then again, some sector-specific, small, like discretionary consumption, automobiles.
So on consumer, I was just coming to consumer actually to understand how you are playing it, because there's this narrative that obviously now rural is really picking up, and we've seen that. I mean, two-wheeler stocks have been doing exceedingly well. But then and there are stocks like Trent, for instance, that talk about mass consumption and not doing badly at all. But then obviously there's the higher end side of it as well. So consumption, how do you cut it up between autos, between staples, or maybe even, the new age platform companies like a Zomato? Everything is consumption, right, at some level.
Yeah. See, what we understood from talking to so many people, the consumption was not actually slowed down. They actually, the priority is very different for them. Maybe at some point of time, mobiles, maybe garments, and then again, two-wheelers. It is not exactly, depend on their need, but exactly consumption basket is very difficult to predict. But overall consumption is not going down. And in last 2-3 months, there is some green shoots coming from rural economy and some optimism from FMCG companies. So we do see some improvement from here for next 2-3 quarters. But it's too early. In past also, after industrial cycle, the consumption cycle has to balance. So that kind of approach we are keeping here. But India is again a well-diversified country where consumption, nobody can ignore consumption here at some point of time.
Yogesh, banks are still the largest part, I think, of your portfolio if I look at sector allocation. And obviously, because it holds the largest even on the Nifty and most indices. How do you approach the banking theme from here? The largest name hasn't moved. HDFC Bank, and valuation-wise as well, looking pretty okay. A couple of private sector banks, you name Kotak Mahindra Bank, HDFC Bank. At current reckoning, post the run that you're seeing on PSU banks, and maybe a lot of the good news is in the price for the PSU names, how would you approach the banking theme?
Yeah. See, in last 2-3 years, considering the valuations of PSU, and a large part of the growth is captured due to improvement in credit cost. And from here, we do see improvement in private banks, because private banks invested a lot in branches and their IT infrastructure. So operationally, they will do well going forward, because for banking, large part infra projects are not coming. So the growth could be consumer and it's completely customer service driven. And we do believe private sector is much more capable compared to other smaller banks and PSU banks. So incremental growth could be captured by all these big guys, private banks, and valuations are also supportive. And ability to raise deposits and ability to handle some of the issues which the larger banks are much better placed. So that's we are positive on BFSI space, but that to be on even larger banks.
So you'll be leaning more to private in comparison to PSU banks at current valuations, right?
Yes.
Yogesh, you own Shakti Pumps in one of your funds, right? Stocks had an incredible run. I think it's up 10x in the last 1 year, maybe a little over 1 year. Without sort of really talking to us about the prospects, I'm sure you have limitations in terms of what you can do there. But what's the broad tailwind driving this? Is it sort of government focus in segments that they operate in? Is that the big tailwind?
See, overall industrial capex, everything, we require everything. But let's take a new segments like data centers, solar pumps. The demand for pumps has gone up because of government focus on solar pumps. At the same time, overall pump market has grown up because there is a various investments coming from data center, and the inquiry levels are very high in other chemical company as well. But the last 2-3 years, government focus on solar pumps actually resulting in a big growth for this segment. And the solar pump sector growth could be very high in coming years. And at the same time, it is not basically why the government wants solar pump, because they want to reduce their power cost, what they provide to farmers actually. So they are actually net beneficiary, and these are the new trends for overall pump sector, not with only the one or two companies. Most of the companies are try to figure out their opportunity size across the industry. That includes various industries like chemical, pharmaceutical, and refineries.
Okay, all right, Yogesh, we will leave it on that note for this morning. Thank you very much for joining in and giving us some perspective on the market. That's a view coming in from LIC Mutual Fund. Just to go back quickly and check out the screen, we're still looking at extremely flat trends in the Nifty. It's absolutely even. Steven, look at that, just 1 point lower. That's as quiet a morning as the one that we are looking at right now. Absolutely no change, and even the Midcap index is completely flattened out. Bank Nifty is flat. Everything is flat. Well, good time to then go to our next corporate conversation. Then the company in focus is NHPC. Recently, there was the unfortunate event of a big, massive landslide, which impacted the company's Teesta 5 power station and damaged several parts of the structure as well. But we must remember that there was heavy flash flooding last year. This is October 23, because of which anyway, this particular power station was in a state of shutdown. So talk about the outlook ahead. I mean, what happens in terms of just assessing the impact of this event and the broader outlook for the company. We have with us Mr. Rajkumar Chaudhary, Chairman and Managing Director of NHPC. Mr. Chaudhary, thank you so much and great to have you on the show. So first of all, we really hope that there was no loss to human life. Just tell us what's the update on Teesta. I'm guessing in any case, all of these are completely insured. So no financial implications on the company, I assume, because anyway the plant was in shutdown?
Yes, you are right that during the last year, October, the glacial lake outburst was there. And due to that incident, the plant was suffered damage apart from other power station and plant. So the plant was under shutdown, no generation was going on. On 21st of this month, August, there is a landslide just above the TRT outlet structure and GIS building. So that landslide, it is a natural phenomenon. There was nothing because since last 16 years, the plant was in operation and the slope was stable. So due to this monsoon rain and other geological phenomena, the landslide was there. And there is a loss of this TRT gate operation hoist structure and GIS building. Yes, GIS building. These are all insured. So under mega insurance policy, these are insured.
Correct. So we're just trying to understand now what happens to the timelines. I mean, you were anyway looking to get Teesta 5 back on stream. Now there's a landslide issue as well. So what is the timeline that we're looking at by when this plant can come back on stream? And what is the contribution? What is the projected contribution of this one plant to your overall output? So we just know how much is off stream when it comes on stream and what is the contribution when it does?
Before this incident, we were planning to bring back the Teesta 5 into generation by March, April next year. And we were doing the restoration works as per the schedule. So this incident has, has taken the project generation plan delayed. So now we are expecting that within 1 year, it will take almost 1 year or around that. So we will bring back the generation of the power station back. And
so should we say December, sir, should we say December 2025? Now we're in 24. I'm just trying to understand. When you say 1 year.
Almost, because GIS structure and pothead yard structure are damaged. So GIS gas insulated switchgear, we will just tender. Just our incident, our expert team visited the project site from head office, and our director project also visited the project site. And just we are working on the how to restore quickly.
Okay, so maybe third quarter of next financial year, but then I think we should talk about the rest of the business in the meantime.
And you have asked the generation, what will be the generation? So the annual generation is around 2,500, very good project, 2,500 million units.
Okay, Mr. Chaudhary, good morning. So two, three questions. Who is the insurer, sir? Who's the counterparty?
National Insurance. National Insurance.
Okay. National insurance. And what's the claim amount?
Claim amount, we are just assessing. However, we have intimated the insurance company as 400 crore. The previous incident, last year incident also, we are in the process. We have received some advance payment also from the insurance company, around 200 crore. So
no, for this incident you've received?
Yeah, this incident not. The last year incident.
Last incident. So that's what I'm trying to understand. When you typically, how long does it take? You file now, and I mean, it takes for the money to come in, for the claim to be honored. How long? What's the process? What's the cycle look like?
We have already intimated to the insurance company regarding the incident of loss, and we have intimated that we are assessing. Preliminary assessment, we have intimated 400 crore, but in detail, because we have to give the calculation and all details. So we will give the detail of loss to the insurance. We will submit the detail of loss to the insurance company.
All right. Hi, Mr. Chaudhary. So we have got a fair idea about this particular project. Let's understand business on the whole, because that's something that the market is looking forward to. For this year, what kind of a revenue growth are you looking at? Top line, bottom line, if you could give us a guidance. And also, you had an ambitious plan for 2028, when a lot of projects will already be on stream. So what's the targets over there?
We are expecting that whatever we have achieved the revenue and the annual generation during the last financial year, though we are expecting the same to be achieved during this year also.
So a 10% growth, sir, in comparison to the previous year?
No, similar, same generation we are going to achieve. Next year we are going to achieve more. So this financial year, we are going to commission the Parvati 2 800 megawatt project by the end of December. We are targeting that is 800 megawatt, and that generation for 3 months we are expecting. And with that commissioning, we are expecting some increase in the generation of Parvati 3 also, because the tailwater level, tailwater will go to the reservoir of Parvati 3. So, but there is less water in the river. So during this monsoon period, we are getting lesser water and lesser generation in comparison to previous year. So with commissioning of Parvati 3 and this, will be all achieving the similar generation and revenue profit.
You know, Mr. Chaudhary, last year you did close to around 9,600 crores. Previous year it was 10,600. So you have been in that vicinity of around 9,500 to 10,500 crores on the top line. Your current market capitalization, I think, is close to around 96,000 crores. And for the last year, you did around 4,000 crores of PAT. So let's focus on the bottom line. This year, what will your PAT look like? And for 2028, post Parvati coming on stream and the other factors that you've mentioned, what can your bottom line look like?
Bottom line also, this year we are expecting the similar around
4,000 crores. And 2028?
From the next financial year, it will be increased to 7,000 crore. Next
7,000.
Because Parvati 2, Parvati 3 and Suvansi, we are going to commission 3 units, 750 megawatt during the March of this financial year. So that accumulates this financial year 24, 25 and 26, 27. So we'll increase the PAT to 7,000 crore.
In 27, right? In FY 27.
Oh, yeah.
28. 27, 28.
27, 28. I hope your team is on board, sir. You know, they seem to be hinting something. So we are taking it from you here on CNBC-TV18 that in this year, the PAT will be more or less stable. But in FY 28, it's around 7,000 crores, right?
Yeah. FY 28, it will be around 7,000 crore. More than that.
For all this capex that you've lined up for the next 7 to 8 years, earlier we were working with a number, I think, of around 30 and 12 to 13,000 crores. Then it was increased to around 15,000 crores. So tell us, what is the fresh guidance on the capex, and break it down for us as well.
This year, our capex is more than 11,000 crore. And we have already spent 3,200 crore by July end. We are on the target. Last year, we spent more than 8,000 crore capex. So we achieved more than 83% of the target. But this year, we are on the target and we'll achieve more than 11,000 crore capex.
Sir, just one last number. You've already given us the way the profitability will increase as Parbati 2, 3 and Subansiri come on stream. The regulated equity, I believe it's close to 12,800 crores as of now. As these projects are commissioned, how will the regulated equity increase? So just give us the numbers FY25 and FY26 and then going into 27-28.
FY28 till FY28, the regulated equity will be 29,000 crore.
Okay. And this year? I mean, this year
same. This year, same.
This year it will be the same and then goes up to 29,000 crores.
Yeah.
Right. Okay. Just one point, Mr. Chaudhary, and I don't know if you see this as a risk. These increasing sort of weather-related developments, I mean, be it landslides or flash floods, and I mean, you have to operate in regions which are susceptible to these weather events, right? Natural disasters, etc. I mean, how sure is that? When you see this as a risk or something that one just lives with, and financially, does it have any implications? I mean, do premiums go up substantially? I mean, you can give us a sense, sir.
Yeah. You are right that with such incident, the insurance premium have gone almost double or more than that. 500 for our mega insurance policy, more than 500 crore annual premium. Such a natural incident and geological incident are expected in the young Himalayas. Only thing now the government agencies, various government agencies and including NHPC, focusing on the early warning system. So with the help of early warning system, we can know about the incident earlier, and so that we can minimize the loss of lives or loss of properties.
Got it. What is the annual premium now, sir? I mean, what you pay out every year?
500 crore mega insurance policy. Yeah.
500 crores, and this is the annual number, and this is what you paid out in what you will pay out in 25, or what you paid in 24.
Same 500 crore.
500 crores. Okay. Got that. Thank you very much, Mr. Chaudhary. Appreciate you joining in and running us through all of that detail. So FY28, big numbers, big plans. So from 4,000 crores, number goes up, but the PAT level goes up to 7,000 crores. But that's still, I mean, sometime down the line. 96 on NHPC. It's come off the highs, of course, and now consolidating. We'll take a quick commercial break here. We'll come back. We'll have Param Subramanian, Vice President Equity Research at Nomura. We discuss the big deposit concerns for the banking system. Stay tuned, that's coming up. Welcome back. Let's put the spotlight on banks. Nomura in a recent report says that the debate around deposit mobilization and high LDR ratio has shown no signs of abating. They are adding the argument that banks are unable to mobilize deposits is misplaced. To discuss this and more, we have Param Subramanian, Vice President Equity Research at Nomura, now joining in. Param, good morning. Great to have you with us here. Thank you very much for your time. So, why don't you begin by making the case when you say that they are unable to raise deposits? I mean, obviously you can raise deposits, but if you pay out more, right? I mean, at some rate you'll be able to raise deposits. Is that what is happening? And if you can give us a sense, so compared to FY22, if you take all banks in question, public, private, everything, the amount of loans that they all made, I think it was about 23 lakh crores. In FY25, will that number be lower? Or are you assuming that absolute number to actually go up. Your thoughts?
Sure. Thanks, Prashant. Thanks for having me here. So, two key points that we want to highlight. Of course, there's been a lot of discourse around deposit mobilization for banks. Now, what we want to highlight here is that the main two reasons for deposit mobilization being lower, loan-to-deposit ratios relatively looking higher. Firstly, if you look at the money creation by the RBI, what is called the reserve money often, that has actually been very low over the last 2 years. It's only been about 60,000 crore cumulatively over the last 2 years, compared to about 6 to 7 lakh crore on average per year in FY20 to 22. That is one of the bigger reasons for deposits in the system looking lower. The other reason is a bit counterintuitive here. It's that the higher profits that the banks are generating right now, the banks are generating about 1.7% system level ROAs, and ultimately the profits of the banks are appropriated from the depositors. So when the profits go up, the deposits do see some shrinkage, and the real ratio one should be looking at is loans divided by deposits plus the net worth of the banks, which is actually largely in line with the 10-year average. So this whole discourse that banks have some struggle in terms of deposits is actually not very correct. One of the key reasons, like I highlighted, is actually how the
I think we lost the line there with Param. We'll just sort of try and have him back. We got a fair bit in terms of some of the reasons that he was highlighting, but we'll just try and have that line back up with Param in just a bit from now.
I guess one of the key points that he's making is that money supply hasn't increased as much. I mean, that is still fairly muted. So then the argument that there's a massive sort of hunt for deposits, perhaps it doesn't quite add up. But let's see when we get him back. Because the whole point is that quarter after quarter, we keep seeing the reported numbers. And that's where there's either zero growth or lackluster growth, or sometimes, no growth at all. And another telling factor is that CASA ratio for most banks in the first quarter has been slipping, both quarter on quarter and year on year.
And you talk to banks, they all say sometimes on the record, sometimes off the record, that there is a, you got to sort of work on deposits and deposit mobilization, etc. But Param was making some interesting points, and unfortunately the line went off.
I mean, even the finance minister kind of acknowledged. I remember in her meeting with bankers, which happened, I think, just last week, saying that banks need to look at more innovative ways to retain deposits and sort of get customers back. But I don't know. Do we have Param back?
Yeah, we have Param. Param, go on. We lost you there, but please, I mean, we heard. You were midway, so please continue and finish that point.
Yeah. So firstly, one of the bigger reasons for deposits lagging loan growth in the system over the last couple of years is actually the pace of reserve money creation by RBI has actually been very low compared to the period before that, the COVID period, when so over the last 2 years, RBI only created about 60,000 crore of money supply on its own, versus about 6 to 7 lakh crore on average created in the period between FY20 to 22. That is actually one of the reasons, and this is a central banking action, and it's not something that banks can do much about. The other reason I was pointing out is that when banks generate higher profits, the profits are ultimately appropriated from the depositors, and so higher profits have the effect of reducing deposits at the margin, and this is something, as we all know, banks are going through a very good cycle and are generating high ROAs. That is also putting some pressure on deposits. There is also this discourse that money is flowing into capital markets, into mutual funds, which we think is misplaced. It doesn't have any impact on system deposits. The only leakage from money supply to deposits is cash in circulation. And if you see over the last 2-3 years, cash has only been growing at single digits over the last 2 years. So that is not a systemic concern. We think that once we move into an accommodative sort of policy and liquidity in the system starts picking up as a consequence, with RBI, say, being more accommodative, deposit growth should start picking up, and we should naturally see LDRs at a system level coming down.
But while we take that point, Param, the counter question that really comes to mind immediately is that the RBI itself has been cautioning against credit growth running away and deposit growth not keeping up pace, right? I mean, it's not a written down rule, but the understanding very clearly is that the credit deposit ratios have to move to a more sustainable level. No bank, I think, talks about a specific number, but everyone agrees that, yes, the RBI needs it to be in a certain healthy range. So if that is to happen and while deposit mobilization picks up and rate cuts happen, are you expecting a drop in credit growth in the meantime? When do we see the balance coming back?
No, you're absolutely right. So the policymakers have clearly made it, a key focus area that loan-to-deposit ratios need to come down. We've also had RBI come out with a draft LCR circular that, in some way, enforces this, that brings LDRs for the system down. And until the policy environment and you see the powers that be continue to talk about this, of course, you will have to see credit growth moderating for the system, especially for some of the higher loan to deposit ratio banks. They will have to see loan growth moderation from the current 15% odd system growth that we are seeing, ex of HDFC that the system is reporting. We actually think there will be some moderation going by the end of the year to about 13%. But the key point that we wanted to highlight is that this is not a systemic concern that deposits are not coming through. It is more a cyclical phenomenon that will correct itself.
I mean, Param, if you look at ECBs, right? I mean, just one of the data points. A lot of banks, actually more NBFCs maybe, they're raising money through ECBs from the beginning of the year. I think the pace is almost double of what we saw for the same period last year. Isn't that a sign that, deposits are hard to come by?
So if you look at the quantum of those numbers, Prashant, they aren't as, from a system level perspective, you have to put it in context of the fact that a system level deposit number is about 250 trillion rupees. Of course, we're seeing ECB mobilization pick up, and it's more a non-bank phenomenon or a corporate phenomenon. But it's not a clear indication. If we stack it up against, say, the net worth generation by the banks over the last 3 years, it's been about 6 to 7 trillion rupees over the last couple of years. The banks are actually, strengthening their balance sheet because the profits are coming through and actually bolstering their CET1 ratios. They have the ability to lend. The constraint is not, very significant at this point in time. But if you have the policymakers talking about this, naturally they will have to abide by this, and the loan to deposit ratios will have to come down.
Param, just to wrap things up, two specifics. One, by when do you expect the problem to resolve itself? Basically, by when do you expect deposit growth to start showing up, number one? And number two, and this is not a stock call question, well, you mentioned that credit growth will have to come down for banks where the credit deposit ratio is too high. Just some names, and again, not related to the stock price, but just some banks which will have to see a moderation in the credit offtake.
Sure. So deposit mobilization, I think at a system level picks up around the time of we move to an accommodative sort of policy stance from RBI. We would think that, once we move into, say, rate cuts gradually, RBI will bring liquidity into the system. It will want to transmit those rate cuts, and the natural way to do that is to push liquidity into the system, and that will, have a consequent positive impact on deposit mobilization at a system level. So we'll have to watch out. Of course, at this point in time, we are early in that cycle. We'll have to watch out. But I would think around the time rate cuts begin, we would start seeing that. The other point you were asking on growth moderation. Look, it is well understood. Some of the banks, for example, HDFC Bank has clearly talked about a moderation in its loan growth outlook, and this is well understood. It is a transition period, as the bank has called out, and we should think that over the medium term, once they get this in order, things should be back on track for them as well. Yeah.
All right, Param, we leave it there. Thank you very much for joining us. It's a pleasure having you here on CNBC-TV18. I think, the market was sulking a little bit and it's picked up pace really nicely. So we're up about 45 points at about almost 25,100. So I think back almost at yesterday's high. Yesterday's high was 25,130. We're at about 25,100. Ajit?
Guys, just one thing. Resourceful Auto, you remember that one, right?
The listing was today.
Yeah. What did it list at? Any idea? Let's take a wild guess. Such a big subscription, so much of talk. What is it? You know how much it is in comparison to the IPO price? Not moved at all. 117 was the IPO price.
Oh, wow.
So that's what it is.
All the hullabaloo.
Yeah. And, the bikes are not moving, I think, for now. Actually, or maybe the bikes are moving, the stock is not.
No, we should put that out as an alert for our viewers in terms of that listing which has happened. It's an SME listing, but there's an interesting factoid and we can talk more about this as we go along. The other big sort of talking point through the course of the day in the second half especially will be the Reliance Industries' AGM. This is the 47th annual general meeting. This 2 p.m. is when Mr. Mukesh Ambani, chairman of RIL, will be addressing investors. Markets are awaiting sort of definitive concrete plans as far as Jio and the retail business listings are concerned. Of course, I mean, it's a conglomerate. It's many, many businesses in one entity, which is RIL. Prabal Sen is energy analyst at ICICI Securities. Prabal, good morning. Great to have you with us here. Appreciate it. I'm sure that some of your colleagues track other parts of the businesses of Reliance as well, right? So you would have put your heads together to kind of come up with what really markets are watching. So put on that hat for us, not just the oil hat. What should we watch out for from the AGM today, Prabal?
The listing price maybe for Jio and retail, as well as the time of listing. That'll be great.
Are you being serious?
No.
Look at the smile. We see the smile, probably, yeah. But
I just had to confirm. I mean, that was a poker face.
No, I think on a serious note, if you look at the last couple of years in terms of what the expectations have been, to be fair, I think concrete news in terms of either timeline or milestones around the unlocking of value of both retail and Jio has been expected probably for the last couple of years. So this time it's not much difference. I think the reason why probably there is more optimism, including on our side in terms of more concrete news, is because the tariff increases that have been awaited by the markets, particularly in telecom, have actually come through to a certain extent. So therefore the question now becomes are these numbers and is this visibility now enough for the unlocking of value and for the strategic investors to basically look at a price and say, hey, this is a price that we can look to monetize and therefore go to the public. So to that extent, I think the probability of some more news coming through for both retail and Jio probably increases. Having said that, as I repeatedly mentioned, this has been expected for the last couple of years, probably for the last 3 years. We have been basically building in this expectation. So I don't want to speculate too much on exactly what will be announced with respect to the listing. Any news that comes through, obviously providing any clarity on what the roadmap is, will obviously be taken positively by the street. That's how I'll probably look at it.
Sure, absolutely. Prabal, I guess that remains the one big announcement that we watch out for. But coming down to more specifics of the part of the business that you track, and that's energy. Now, I remember it's been, I think, over two to 3 years since we started getting the big roadmap on the renewable energy side as well, right? The gigafactories at Jamnagar and, everything that's happening over there, the electrolyzers, etc. Now, from that perspective, what are the further specifics that could provide a fresh impetus to the stock? And I'm purely talking about the energy business now. What would you want to hear?
No, sure. I think if you look at the annual report that was released, probably about a month ago or so, or probably not even that, it does talk in more detail in terms of work that has been done specifically on the solar front. I think, it's a reasonable expectation perhaps to look at basically milestones being probably talked about in terms of setting up of the 4 gigafactories that were spoken about for the first time a few years ago when the investments were first announced in the renewable space. So any milestones, I think, with respect to maybe specific capacity related numbers, whether it's in terms of solar or in terms of green hydrogen or blue hydrogen, whichever one is more feasible right now. I think milestones on that front is something that we would definitely be looking forward to. In addition, not just in new energy, but if you remember, there were specific petrochemical expansions as well that were announced. They have stated their long-term goal to essentially move to more and more conversion of crude oil as such into direct chemicals and specialty chemicals. So my sense is that, there could be more announcements, more, strategic direction that could be announced in terms of how that will be achieved. So those are the two aspects that I would probably look at in this AGM speech.
So Prabal, let me ask you this. In the SOTP right now, how much are you ascribing to upstream? How much is, overall O2C? And I don't know, is new energy getting any valuation as of now in target prices? Or what will, if not now, then what's the roadmap ahead on it?
So to answer your first question, OTC plus upstream would probably be in terms of my overall SOTP target price of close to about 2,900 rupees. Around 700 rupees odd comes from OTC, 700 to 750, including upstream. Retail and Geo obviously are much bigger components, and I'm talking about EV, not equity value, because net debt becomes sort of a consolidated number to be reduced. But in terms of the overall EV of around 3,200, 3,300 rupees a share that we have, almost 2,000 rupees actually comes from Geo and Telecom alone. Geo and retail alone. About 700 to 800 rupees comes from the OTC plus upstream segment. But new energy, to answer your question, as of now, we value it at about 1.5 times capital employed on the basis of the 70,000 crore that was announced as a targeted investment. As I said, as and when we receive more clarity, as and when we have more understanding of the economics of both the solar, hydrogen, and the other projects, that is my sense where, earnings can get up and down depending on the progress made. But I would believe that even the street does attribute some value. When I say 1.5 times capital employed, that translates to around 150 rupees a share of enterprise value at this point of time.
Prabal, in terms of timelines, if they sort of decide to go ahead and do this, right? What is your assumption? By when are we looking at these entities coming to the market?
Honestly, I would not.
The earliest they can do, if you start now.
Well, I think if they start now, given the size and scale of both the businesses, I would be surprised if they can get it done in a very short period of time. You would probably look at, from a filing perspective, from a timeline perspective, not earlier than probably a year. But I would not want to hazard a guess, to be honest, in terms of what they would be looking to do.
Prabal, just to cap it off, so I heard you clearly, you're ascribing 150 rupees of EV, and the metric is 1.5 times the capital employed. If we look at global examples of renewable businesses, new energy business, something comparable, then what kind of valuation multiples, perhaps in future, when the scale-up happens, what is the roadmap that we could be looking at as we value these businesses?
I think if memory serves, if we look at comparable businesses which have become established, specifically, frankly, only a couple of Chinese names come to mind, and, some European players, and none of them are doing all of the businesses that Reliance is looking at getting. There are some isolated solar players, which you can compare the REC solar acquisition to, and so on. But definitely, I think somewhere around 2.5 times capital employed is definitely, something that I'm sure Reliance would also be aspiring to. Otherwise, they don't get into businesses unless they can make multiples of their capital investment. That's a fair way to look at it.
Okay, all right. That gives us a good perspective. The runway ahead, perhaps, that could open up as these, green businesses come on stream for Reliance Industries. Prabal, great talking to you. Thank you so much. And we hope to, touch base again once the announcements are out, and let's see what indeed comes out of the AGM today, which, a reminder, of course, the proceedings kick off 2 o'clock onwards. And of course, you'll get live coverage here along with all the analysis on CNBC-TV18. We'll take a break on that note. We'll talk all things commodities on the other side with Manisha Gupta. Welcome back. So we're looking at the market picking up a little bit of momentum now. There's about a 50-point upward move on the Nifty, and the Bank Nifty is up about 0.25% as well. We have Mitesh back with us for a fresh perspective. Mitesh, so what would you do? Are you inspired by this little buying that's coming in? Any index trades right now? If not, then stocks?
So I'm inspired by the Bank Nifty. So I've been complaining about the non-participation of Bank Nifty for the last many days. I think today we have some signal. Buy here with the stop below 51,000. That's about 250 point kind of a stop. And we'll look at a target of around 51,750, 800 to begin with, and then maybe even higher levels. And I also have a banking stock as a recommendation, which is IndiGo Bank. Recommending to buy here with a stop below 1,400 for a target of 1,450 and then secondary target of 1,480. So quite positive on banking index and IndiGo Bank. And that apart, I think the Adani Group stocks are looking slightly weak. So I have a sell on Adani Ports, and it's trading around the trigger level of 1465, 1466. It's trading at 1470 right now. So sell below 1465, keep a stop at about 1492 and look for targets of 1410.
Got that. Thank you very much, Mitesh, for that. So those are specific trading ideas. Markets picked up right back up about 50 odd points or so. Let's focus on commodities now and what's top of mind. Manisha is here to help us with that. Manisha, morning.
Morning, Prashant. Thank you for that. Well, I'm looking at metals. Today isn't such a great day because we have seen some profit taking coming in. So most of the metals, Nifty metal as well, continues to decline. But I'm looking at a bigger picture here. The month of August has been on the positive side. After those declines in the month of June and July, August at this point in time seems to be closing on the positive side. We have gold up 4.5%, silver is trading in the positive. Copper prices also have come off sharply from its all-time highs of 11,000, trading at around 9,200, but managing to close August just about in positive. The better gains clearly have come in from aluminum and zinc, 9 to 11% of gains there, and steel prices also have turned around from its multi-year lows to about 4.5% of gains in the month of August. What has worked for the metals is the decline in dollar index. Even with those bit of a gains, it still is trading at around 13-month lows. The markets also are looking at the US Fed rate cut expectations in the month of September. And then there is higher EV production numbers that we've seen come in from China. Even the diesel demand in Europe has been declining because much of their fleet is moving on to EV. That is where the metal demand really seems to be coming in from. And then, of course, there is demand from decarbonization initiatives, and many of these metals are part of that as well. What doesn't seem to be working for metal prices, especially in the last couple of days, are the reports from BHP, which says, or warns rather, that the demand from China continues to cool down in 2024. BHP also goes on to say that, especially when it comes to copper, the last year demand growth in China was to the tune of 6%, but this year could just about be at 1 to 2%, so not a very great number there. Also, uncertainty ahead of the US presidential elections in the month of November are keeping many of these markets jittery. Going forward now, a lot of banks and brokerages still are positive or bullish when it comes to aluminum and zinc, and not so much for the other metals there. Citi, to begin with, is bullish in sense of aluminum for 2024 fourth quarter and all of 2025 as well. They expect the prices to average around $2,800 a ton in 2025. Citi also anticipates the zinc prices to continue to gain up as well, and for that, the target is 3,100 for the first quarter of 2025. ANZ is bullish on copper. They anticipate a price of 99.29, and there also is a report from ING. They also are in favor of buying copper to the tune of 99.50 as an average for all of next year.
All right, Manisha, thank you very much for that. That's commodities in focus. We'll take a quick break here. We are back with our special segment. It's the economy. Ramani Dhati, CFO of Team Lease, and Lohit Bhatia, President of Workforce Management at Questcop, will be on the program, and we'll discuss trends in hiring and the state of employment in India. Stay tuned.